Assalamualaikum warahmatullah and welcome everyone. In this video presentation, we will be talking about another short standard that is MFRS 134 Interim Reporting. For this presentation, I would like to give credit to Male Al-Sharairi, Radi Al-Hamadin, Frances Isa and Ode Kakesh for the article on Interim Financial Reporting and Compliance with IS 34, Claudia Elena Grigores Ichim and Lucia Morosan Danila for the article on the importance of financial interim reporting for the positions of companies, as well as Bursa Malaysia for their consultation paper. We will be touching on these topics. It is not as lengthy as it may look. As this standard is all about disclosure, the challenge is not about the disclosure itself, but about what interim financial statements looks like and what period the information within that financial statement should represent. At the end of the presentation, we will be looking at interim financial reporting in the current condition that we are in. First things first, we need to understand what interim financial reporting means. The word interim shows that the financial statements should represent a period that is less than the full financial year, be it quarter period or semi-annual period, be it complete financial statements or condensed financial statements. But why would anyone be interested in a short-term reports of a company? We need to understand the annual or full financial year reports should be audited before being published, while for interim reports, they are rarely required to be audited. Therefore, you can imagine that the time taken to produce such report would be much shorter and quicker. Get this, users need not to wait months before they could view results of companies they have interest in. And instead of waiting for another 12 months for the current financial year, we could view results and updates every 3 to 4 months. So this can be translated into timely information to users. Such report, regardless of a shorter term such as 3 months for quarterly interim report, would be useful for current and potential capital providers to make their capital allocation decisions and stakeholders to make operational decisions. Such shorter reports could also be a source of frequent informational feed about events on an entity. Timely information about these events rather than 12 months later would help giving signal, risk and uncertainties associated with entities' cash flows, if any. This frequent and timely information also provides meaningful information rather than historical information. It provides development directions and on the seasonality of some activities within the companies that may be used by users to make informed decisions. And this meaningful information should be able to promote better corporate governance and transparency of the management of the companies in the eyes of the public and market participants. For Malaysia, public listed companies, in addition to a complete annual financial reports, are also required to submit quarterly reports. That means, for example, while preparing the annual financial report for 2020, it should also prepare financial reports for the first quarter of 2021 that should be submitted no later than 2 months after the end of the quarter. This means that companies would be preparing 2 reports in the first few months of the new financial year. And this would also mean much pressure for companies, regardless of the merits that we have just talked about previously. This requirement that was started in 1999 when Bursa Malaysia was known as the Exchange has been continuously generating interest and global debate, so much so that the Exchange issued consultation paper number 1 in 2013 and again in 2018 to review the requirement, to discuss the merits and criticisms of this practice. The requirement, however, remains until today. You must understand this. Requesting a submission of interim report is one thing, and requesting to submit interim reporting every 4 to 5 months is another. The argument is not about whether interim reporting is inevitable or important to users, no question about that, but the main criticism is about the frequency of the reports that need to be submitted. We need to look at both parties, not just the users, but also the preparers. You may read this further in the consultation paper number 4, 2018 in Future Plus, but I have listed here the main points of the paper. Putting the issues with quarterly report aside, the objective of MFRS 134 is to prescribe two things. First is to prescribe the minimum content of an interim financial statement or report. And second is to prescribe the principles for the recognitions and measurements in the report, regardless of whether it is a complete report just like the annual report or a condensed one. What it tries to achieve is to have timely and reliable interim financial reporting, because a timely and reliable interim financial reporting improves the ability of stakeholders like investors, creditors, and others to understand an entity's capacity to generate earnings and cash flows and its financial condition and liquidity. Before we discuss the prescriptions, let us first talk about the definitions of interim financial reporting, henceforth IFR. First, interim period. As mentioned earlier, it simply means a period that is shorter than a full financial year, be it a quarter of a year or a semi-annual period. Interim financial reporting simply refers to either a complete financial reporting, just like the annual financial report, or a condensed report. And this requires us to know what is the minimum information that would fulfill the condensed financial report requirement. First, let's look at the minimum components of an interim financial reporting. As we can see here, the components are the same with the full financial reports. It is just that instead of a complete financial statements and a complete notes to the accounts, at a minimum, entities are required to provide condensed financial statements and selected explanatory notes. But please bear in mind that this is at minimum. Should you want to produce a complete financial statements, by all means produce it. In addition, remember that for statement of profit and loss, we can either prepare it together with information on comprehensive income in one statement of profit or loss and other comprehensive income, or we can present them separately. So paragraph 8a stated that for the purpose of interim financial reports, what we need to present is the information on profit or loss. So if that information is presented in a separate statement from the information on comprehensive income, then the information required to be presented in the interim financial reports is from that separate statements that shows information on profit or loss. On the form and contents of interim financial statements, there are 4 things to note. First, if we want to produce a complete financial statement, we must make sure that the statement conform to the requirements of MFRS 101. Second, we can provide a condensed financial statement instead, and we will look at the minimum information required in a bit. Third, we must present earnings per share, both basic and diluted for the interim period. Fourth, similar to requirements in paragraph 8a, if we present items of profit and loss in a separate statement from the statement on comprehensive income, the earnings per share must be presented in that statement where profit or loss is presented. Coming back to the condensed financial statement, the minimum information required for the statement are the same headings and subtotals included in the recent annual reports. So whatever you have in your annual financial reports, you must have it in the interim financial report as well. The selected notes to the accounts required by the standard, and where necessary, additional line items that must not be excluded lest making the statement misleading. So these are the requirements of a condensed financial statement. Basically, we will still need to have the same headings and subtotals that are available in the recent complete annual reports, and on top of that, additional items that are not there but needed to avoid misleading information. Remember that interim financial statements are also functioned as an update of the recent annual reports. Paragraph 15 specifically highlights events and transactions that are significant enough to be reported in the interim report as update to the recent annual report. The standard lists down examples of significant events and transactions that we might want to disclose in interim reports in paragraph 15b, and it must be in accordance with relevant standard. In addition, paragraph 16a requires a set of additional disclosures, 11 in total, that must be included in the notes or elsewhere in the interim financial reports, such as on the face of the condensed financial statements. If the disclosure is not in the interim financial statements, they must be incorporated in a cross-reference from the interim financial statements to some other statements, such as management commentary or risk report that is available to users of the financial statements. If you do not provide these disclosures, the interim financial report is deemed incomplete. And all financial information presented in the report should be reported on a financial year-to-date basis as per end of the interim period. Paragraph 19 requires that the fact that the interim financial reports are prepared in compliance with relevant standards should be disclosed. And paragraph 28 requires that for the final interim period, if report for that final period is not prepared, any significant changes in estimates must be disclosed in the annual financial report instead, specifically the nature and amount of the change. The standard also provides guidelines about the period in which the interim report should represent for each statement. For statement of financial position, we need to prepare the statement as at the end of the interim period and a comparative statement as of the end of immediately preceding financial year or the financial year immediately before current. For statement of profit or loss and other comprehensive income, 4 statements are required. First, the statement for the current interim period. Second, a statement showing cumulative amounts for the year to date. And third and fourth, a comparative statements for the same period a year before for the same interim period and cumulative period. Please note, for statement of profit or loss and other comprehensive income, there will be a situation where only 2 statements need to be provided instead, as we will see later. For statement of changes in equity, we are required to prepare a cumulative statement for the year to date and a comparative statement for the comparable period also for the year to date from the year before current. Similarly, for statement of cash flows, we are required to prepare a cumulative statements for the year to date and a comparative statement for the comparable period also for the year to date from the year before current. Consider this example. Say a firm has a financial year that ends every 1st December, and the firm decided to present interim financial statements semi-annually. That is 6-monthly period, and the current financial year is 2021. For SOFP, the firm will prepare the interim report as at 30th June 2021 and a comparative statement for the financial year immediately before, which is as at 31st December 2020. So that means it will be for 6 months current interim period and for 1 year for the year before. As for profit or loss statement, the firm will prepare 6-month interim period ending 30th June 2021 and a comparative 6 months period from the year before ending 30th June 2020. So that is 6 months current year interim period and 6 months the previous year. Note that the firm will produce only 2 statements instead of 4, because the requirement for the current interim period and the cumulative year-to-date statements are the same, so only 1 statement is required. Similar goes to the immediate year before. For both SOCF and SOCE, the firm will prepare 2 statements, a statement showing cumulative information for the current interim period year-to-date and a statement showing comparative cumulative information for the same period from the year before. Now, what if the interim period becomes quarterly? First quarter ended 31st March, so for the year 2021, The SOFP will be as at 31st March 2021 and 1 year as at 31st December 2020. As for the statement of profit or loss, the firm will prepare 3-month statements ending 31st March 2021. This one statement will represent the statement for the current interim period and cumulative year-to-end period. The other statement will be for comparative period for the year before. For both SOCE and SOCF, the firm will prepare cumulative statement for 3 months period ending 31st March 2021 and for the 3 months period for the year before. Later, for the second interim report, that is after 6 months, the firm will need to prepare another set of financial statements. For SOFP, the firm will prepare a statement for 6 months as at 30th June 2021 and for 1 year as at 31st December from the year before. For statement of profit or loss, the firm will prepare 4 statements: 6 months cumulative information for year to date ending 30th June 2021, and for the second interim period, that is 3 months ending 30th June 2021. The other 2 statements are comparative statements from the year before. And for both SOCE and SOCF, the firm will prepare cumulative statement for 6 months period ending 30th June 2021 and for the 6 months period from the year before. For the fourth quarter, the interim reporting will be as shown here. We will have SOFP at the end of the fourth quarter, which is also the end of the financial year. We will have for Sopology a 12 months cumulative report ending 31st December and a 3 months current interim period report ending 31st December. For statement of changes in equity and statement of cash flows, we will have both cumulative report for 12 months ending 31st December 2021 and a comparative statements from the year before. As you can see clearly here, there is a very good reason why we might not want to produce the final interim report and instead focus on producing the annual financial report for the current financial year 2021, and that is allowed by the standard. Paragraph 23 requires that we assess the materiality of the financial data to be reported in deciding how to recognize, measure, classify or disclose an item for interim financial reporting purposes. Also, note that for the interim period, we need to recognize that estimation would be used in a greater extent since we are talking about a much shorter period, either every 3 months or 6 months. For recognition and measurement, entities should apply the same policies applied to the full annual financial reports, except those that should be applied on annual basis. And the frequency of the interim period, quarterly or semi-annually, should not affect the measurements of financial data and results, and it should be made on a year-to-date basis. For revenue received seasonally, like dividends and royalties, it should be reported when they are occurred and should not be anticipated in the interim report or deferred to the end of the entity's financial year end. Similarly, for costs incurred unevenly throughout the year, the cost shall be anticipated or deferred for the interim period if and only if that is appropriate treatment for full financial year at the end of the year. For example, say we have periodic maintenance expense. If the expense is expected to only occur at the end of the financial year, it should not be anticipated in the interim report, as intention to provide such expense does not call for obligation to pay as at that date before the end of financial year. For depreciation and amortization, we would anticipate them in the interim reporting. However, it should apply only to those assets available within that interim period. Year-end bonuses is another common expense of an entity. The nature of year-end bonuses also varies. It can be based on monthly, quarterly, and annual operating results. Unless the obligation to pay the year-end bonuses is legal and constructive, that employees are made to understand that they will receive the bonus, it should be only at the end of financial year when the decision has been made. More examples can be viewed in illustrative examples of the standard in Part B. As mentioned earlier, the use of estimates is even greater in interim reporting. Having said that, the method used for the measurement must be reliable and all related relevant and material information shall be disclosed. For this, you may want to refer to illustrative examples, Part C. Similar to full annual financial statements, for interim reporting, if there is a change in accounting policy, the effect of that must be taken into consideration. Only for interim reporting, the change in accounting policy that should be taken into considerations are those other than due to requirements by new standards. Before we end this discussion, it is wise to highlight the current situation that we are in, the pandemic COVID-19. It has grave effect to the economy and much on how we deal with our day-to-day lives. With a huge impact on the economy, certain industries are suffering from the impact more than the others. So the first thing that should be assessed is the ability to stay solvent in the near future. So how is that related to interim financial reporting? It is very relevant since this is the first and quickest report that users could have after the previous year's financial year end. So the quickest update will be from the company's interim reports. I will not be discussing these issues here, but I have shared with you two articles by KPMG and PwC that discuss the impact of COVID-19 on interim financial reports. So that is all about interim reporting. Thank you very much for tuning in, and until next time, wassalamualaikum warahmatullahi wabarakatuh.